Hey everybody, hope everyone is doing well and had a good day. In this video, I will review the Emini 5-minute chart from Friday, June 6th, 2025. And the first thing I want to talk about is the rally on the open. Now we're missing some information because this is a PowerPoint slide, but if we had even just the RTH chart, regular trading hours, we saw we had a gap up going into today, and this rally on the open was breaking out above the prior day's high. And the problem I had with the rally, bars 1 through 4, is the higher time frame context. Yesterday was a big outside down bar, an outside bear bar, and I thought it would be more likely that there are sellers above that bar than buyers. So here's a breakout attempt of a bad stop order buy signal bar on the daily chart. We're getting a rally on the open. Now what does Al say? 50% of the time on the open, no matter how strong the breakout, it's going to fail and reverse. So we're far above the moving average, bars 1 through 4. Decent momentum, really good bars 2 and 3. But then 4 and 3 a little climactic, a bigger bar. But 4, a pause bar, so disappointing. And if you're buying up here, you're buying momentum. And if you think about it, the moving average is it's one measure of a fair price. And if this is the average or fair price down here, then to buy, you're buying at a premium price. You're buying way above the average. And the only way you can logically justify doing that is if your premise is you're buying momentum in a bull trend. So we have a bull breakout on the open, okay to buy the momentum, but 4 is not strong momentum. Bear bar closing below the prior bar's low, not strong momentum. So buy the close bulls on 3, disappointed 4 and 5, and further disappointed with the depth of the pullback on 6. So we sold off from the high of 4 to the low of 6. These traders are disappointed, those who bought up here. So 6, probably a bad high 1, and sellers above, deeper pullback, likely. So sellers above, and you can see we had a really weak channel down to bar 12 and 13. So relatively strong breakout, 1 through 4, and then 4 through 13, a bear channel. You can think about bear channels as bull flags. So bulls are buying on the way down. We sell off to the bar 2 high, that breakout point, and we bounce. And we sell off below 6, and we bounce. New low below 7, and we rally again. So we have 1, maybe 2, 3, and 4. So 3 or 4 pushes already down to bar 12, and we're testing support, the bottom of the bull breakout. 12 and 13, 12 is the biggest bar in this sell-off. If we look at a smaller time frame chart, it's more clear, but this is I said it's a bear channel. Lower highs, lower lows, and we're suddenly getting the biggest bar, bar 12, late in the channel. It doesn't look, or I want to make sure I'm putting it clearly. If we looked at a 2-minute chart, this channel is 20 or 25 bars. That's late in a trend, late in a channel. Plus, we're still completely above the moving average. So the bear channel is weak. We're getting a breakout of the bear channel line on 12 and bad follow through 13, and then a good breakout bar 14. High probability that bar 14 gets a second leg up. And you got further follow through 15, although 15 was disappointing, big tail above the bar, and big down, big up, so probably buyers below. 13 was a bad stop order buy. That's a magnet. We tested it on 16 and got a small second leg, pulled back deeper, and got a high 2. So high 1, 16, high 2, 19. And the bulls got a second leg up, but 18 through 20 testing resistance. So we had the stop order buy above 6. Traders got trapped on 7. This price is resistance. And it's 2 legs up in a trading range. So we can see we're getting a higher low and lower highs. 1, pullback, 2, possibly a second leg trap at the top of a trading range. Not ideal to buy up here, especially with a weak follow through bar 21 in the tail on 20. And 22 was a give up bar. And this is one of those situations where the bears got one leg down in the form of a channel, relatively tight channel. So from bar 4 to 13 is leg 1. We had a low 1, low 2 pullback, and then a second leg down to bar 23. Might be a second leg trap. It's a huge bar in a probable trading range day. And I said the first leg was a channel, leg 1, and the second leg was a spike, leg 2. Breakout to a new low. I also want to mention 18 through 20. 18 through 20 is a bull spike. We have a low, higher low, higher low. And when a bull spike fails, we typically get a measured move in the opposite direction. So from the high of 20 to the low 18 projected down, that's the first target. And the bar closed. Bar 22 closed around there. Reversal and follow through 23, 24. 24 closed above 23, good for the bulls. And a bad low 1 short, bottom of a trading range. Reversal and follow through, probably buyers below 24. And there were. And the bulls got a second leg up, 26 through 29. Leg 1, pullback. Leg 2, pullback, micro gap here. Leg 3. But now we have 3 legs up, testing breakout points, the 18 low, 19 low, 20 low, 21, all in this area. And bar 22 still may get a second leg down. This bar 22 trapped traders. Breakout point 18. You can see we reacted to it on 29 and 30. And this was a deeper pullback. So we rallied from 23 to 24, pulled back, probably less than or close to 50%, but then 26 through 29 pulled back deeper than 50%, so a deeper pullback, and then a rally to a new high, but now we have 3 legs up. It's kind of the opposite of this, where there's a bull breakout, wedge, bull flag, and then a second leg up. Here we have a bear breakout, wedge, bear flag, second leg down. So after 3 pushes up, dangerous to buy here, leg 3 at resistance in a trading range, and then 2, 3 bars, 3 error bars down, 4 bar micro channel, a bad high 1 above 36, high probability that 33 through 36 gets a second leg down. Shallow pullback, we poked above the prior bar, and then got the second leg down to 39. Tight channel, leg 1, leg 2, pause, and then a third leg down or a third push down to 42. But now we have a nested wedge. Bar 1, bar 22, and 42, but also here, 36, 39, and 42, and another sell climax in the late leg at support. Also over here, when I mentioned that failed bull spikes can lead to measured moves down, same thing applies here, only over here, we only got a measured move down of the bodies. So the close of 3, the open of 1, projected down, and 42 came close to testing that support level. But nested wedge, probably a trading range day. At this point, there's a lot of information. We have about half the day shown, and the market is suggesting that today will be a trading range day. 4 bars up on the open, but then a reversal down, deep pullback, and then lots of sideways through here. Big bear breakout, bad follow through to a new low. 3 pushes up, and then 3 pushes down. So lots of sideways. You could say it's a bear channel at this point. Lower highs and lower lows, but the momentum for the bears is not very good. By that, I mean we fall to a new low, like below 13 or 1. If a bull bought below bar 13 or below bar 1 and scaled in, used a wide stop, they made money. And if that's the case, then this is a stairs pattern. If we fall below 23, the odds are you can buy below 23 and you'll probably make money. And that's what happened. We fell below 23 and reversed up. In this case, around bar 42, you can call it a midday reversal. So I said nested leg 3, and here 45, 46, reversal and follow through. Good for the bulls. Probably will get at least a second leg up and possibly a swing. If it's an overall trading range day, we're low in the range, we may test the middle and even the highs. And through here, we got a 3-bar micro channel to 47, bad low 1 short, probably buyers below. We dip below the prior bar and get trend resumption. Another 4 or 5-bar micro channel, nothing to sell. We dip below the prior bar, another shallow pullback, and then trend resumption. Now 55 at the time, we don't know if 55 is an exhaustion gap or a measuring gap, but we know it's not a breakout gap. The start of a trend, it began down here. This one being about 10 bars into the trend, it could be exhaustion, but there's room to the upside. And with exhaustion gaps, you have to be more careful when you are about 20 or more bars into a trend, not so much 10 bars. And it depends on the structure of the trading range or the patterns. But in this case, we do not know, is this going to be a measuring gap or an exhaustion gap, but we got good follow through. 56, small bar but closed on its high and didn't pull back much. Open gap, so micro gap from the high of 54 to the low of 56. So we take the low of this swing, this pivot, 48 low, to breakout point, 54 high, measured move up, and that's where the bulls are trying to get. Plus we have resistance from earlier in the day, the stop order from bar 6, we tested it on 20, and we tested it again on 61. 1, 2, pause or 2, and then maybe 3 legs up. 2 bar 61 at the top of a trading range, trend bar, but let me back up. This is something that I learned recently from Ali's PTM videos, and that is when a bar breaks out below the prior 3 bars and you're in a trend, the trend is probably invalid at that point. So by that I mean here we are rallying from 45 to 59, and then 60 breaks out and closes below the prior 3 bars. And when that happens, the probability is that there are sellers above at the new high, and the market's already in a trading range at this point. And that's what we got here. 61 rallied to a new high, sellers above, and we went sideways for many more bars. That was from the PTM from, I think it's August 2024, the program Reset. Really good information in those videos. So late leg 61, top of a trading range, and then a 3-bar or 4-bar micro channel down to 64. Bad high 1. Probability is that the first reversal up will fail and we'll get a second leg down. The high 1 failed, 66. High 2 failed, 68. Now we have a bear reversal at the top trading range day, a micro double top bear flag, and we broke below the neckline of 65 here, and the measure move down is the target, and we channeled down. Now at this point, 1, 2, 3 legs down to 75, reasonable to exit shorts, and then a 4th leg down on 78, 79. Late in the day, really not ideal for trading past bar 75. That's what Ali recommends. So for me, if I'm ever in a trade, at the end of the day, I just close the position on the close of bar 75. And we can see we got that sell vacuum to that measured move, also testing support from over here, where we broke out of this small trading range. And we found a small reaction there, sell climax, and then we bounced. So that's going to be it for today's Emini review. Thanks everybody for watching and listening, and I hope everyone has a great weekend.